Arlan, it's good to have you with us this Wednesday. What are you seeing in the news and the headlines this week to explain the volatility we saw in the WTI?
Well, I like your term stubbornly strong, because I think that's really what we're starting to see now, and it's the focus of the market. Now, currently we have Hurricane Beryl that's moving toward the Gulf of Mexico, the southern part of the Gulf, and the models are in somewhat of disagreement on the exact path that it's going to take as it goes west. Is it going to curl upward into some of those refinery areas or not? So some of that is risk related to the tropical storm activity, and frankly, we're in a year when we're expecting a lot of tropical storm activity, and that may continue to be a risk for the energy market. But when you look at the energy markets in light of some of the other markets, it would suggest that something else is at hand as well. You mentioned the strength that we saw during the month of June, but then when you look at really what we've seen in these markets really since mid to late last week, with the treasury yields pushing higher, with gold, silver pushing higher, with many of the markets seeming to price in now expectations of economic growth, perhaps more increased inflation pressure. And that seems to be somewhat of the theme in the commodity sector right now that the market is focused on. If the market, and I failed to recognize also some of the increased elevated tensions in the Middle East as well. But when you put all these commodities together, there seems to be a stream of money flow that's thinking that we're going to see economic growth going forward and some increased inflationary pressures and a little bit more desire to own the commodity sector.
How about the supply side of things, Arlan? Because I feel like this was somewhat of a delayed reaction to OPEC, right? We've seen them provide support, a floor for prices for over, I feel like a couple of years now, ever since we saw that don't short the market kind of. You'll feel the pain from, I think it was the Saudi, one of the oil ministers there a couple of years ago, as far as I remember. I have to look that one up. But since then, we haven't been below those prices, that's for sure. I mean, that was a fair warning.
Yeah, exactly right. And when you look at the fact that OPEC has plenty of expansion capacity because they've been curtailing production, and so they could expand that. So if the market wanted to focus on that, they certainly could. The fact that Venezuela is still pumping, even though supposedly we've said, well, we don't support them anymore, we haven't shut them off. And so that supply is still there. We're still expanding supply here in the United States. So if the market wanted to focus on that supply situation, it could. But instead, now it's choosing to focus on a more optimistic demand outlook as we go forward.
You know, Arlan, we were joking around earlier in the week about how the yen used to be a safety trade, right? I mean, look at the yen now. Gold, for example, used to be kind of, it would fall in that category amidst some of the geopolitical tensions. But I feel like more so recently, it's been tied to what's going on with yields and a very level-headed approach towards expectations associated with the Fed. But we've also been keeping an eye on a very well-defined bull trend that's been playing out there as well.
Yeah, we really are. And that carry trade's really been working on shorting the yen and strengthening the dollar. And that's keeping the dollar strong. And you know, a strong dollar used to really have a strong negative correlation with the commodities. But that's really not as true anymore. We're really not seeing that strength of correlation like we once did. The strength of the dollar, even though it hurts us on the export market, we're particularly seeing that in the food-based commodities, the grain and oil seeds. But the commodity sector as a whole, we're not seeing that negative correlation like what we once did.
Yeah, grains have come off a bit. I wanted to get a thought on that from you because I sort of feel like that's helped. You know, Powell talks about this balance, which the market likes, right? Hearing that word. And we watch crude prices on the rise here, but look at beans, wheat, and corn. I mean, completely in the opposite direction.
Yeah, exactly right. Fundamentally, they just do not have a story right now. Maybe one will follow up with a Midwest growing season. So far, it really hasn't. We've had extensive flooding in the northwestern Midwest, but that's affected a relatively small area of the Midwest to this point, about 10% of the acreage, be it highly productive acreage, but still a small part, and the rest of the Midwest doing well. If you look at the crop ratings, they've started the year at a very high level. They tumbled throughout June, but they tumbled down to now where they're normal levels, and we're still looking at the potential for trend yields, which would keep us at relatively high levels of supply. So not really a story there. When you look at wheat, we had drought in the southwestern plains throughout the growing season for the winter wheat crop. but yet we're getting amazing yields. These current genetics are doing an amazing job of producing despite that. We have drought in Russia and the Black Sea, and I still think that's one of the more intriguing stories, which curtailed the size of the Russian wheat crop, to some extent the Ukraine wheat crop, and now that drought's continuing and could curtail their corn crop as well. That's something we're going to have to keep an eye on, but right now we're adequately supplied. Fundamentally not really a reason to rally, but we do seem to have some support underneath of us right now with this broader desire to own the commodities.
Adequately supplied. I like that, right? And it seems like the market does as well in many ways. And it sort of ties into this idea, sort of this lack of dependence on outside sources, right? Some of that, Arlan, talk to me, I feel like, is based on some of the major technological advances that we've made as of recent and been able to benefit and take advantage of.
Yeah, really. When you look at seed technology and the amazing advancements we've made there, and not just seed technology, but it's a mechanical technology as well. With the automation that we see in farming today, and farmers talk to me while they're on the tractor because they're not even steering that tractor. They have the time; they're just sitting in their office watching it go by, so to speak, and they can place that seed exactly where it needs to be, exact spacing it needs to be, with the exact treatment it needs to be. All of that helps the plant withstand some of the stresses that the environment may throw at it. I think one of the downside risks that we need to watch is China and those growing tensions there. A lot of people ask me everywhere I go and I speak, they ask me, okay, what's the results of the elections going to impact as far as China? And I'd say the trade policies between the Biden administration and Trump administration are pretty close to the same right now. And what that says is that it's polling well to be tough on China. China recognizes that. They're moving away from the United States, but part of that is where the strong dollar has hurt us versus our suppliers. But I think the real key is here with Taiwan. If China makes a move on Taiwan, then the assumption of the market is going to be sanctions that make it difficult for China to buy commodities from us. And that could happen overnight. So the question is, what's Xi Jinping thinking? Is he thinking he would rather do something before the elections, after the elections, or maybe after the next term? After the next term, he would be 75 or 76 years old. He has promised that he will do something to reunite Taiwan. When will that be? And I think that's one of the big question marks hanging over really the grain and oilseed markets more than the rest of the commodity sector.
Well, lots to discuss there, that's for sure. That's a whole other conversation in many ways, but it does speak to the complexities associated with trading commodities and the fundamental narrative, Arlan, and we appreciate you joining us here to break it down. Arlan Suderman, Chief Commodities Economist at StoneX Financial.